friends, this is Borbala Banto, CPA from Concierge CPAs. Welcome to our weekly check-in call, community call, where we answer questions that come in from the audience, from our clients, from our friends. It's March 15th, 2019. Today is a national holiday in Hungary. While working on tax season, I'm listening to Hungarian radio, and I just heard that the whole country had a day off. So if you're Hungarian or you have Hungarian background, then this is a celebration day. We here in Cleveland, Ohio, where we are located, we did have some celebrations last Sunday in one of the Hungarian churches, and the community came together. It is about the 1848 revolution that swept through Europe, but Hungary was the only one when there's actually more. It was just a bigger thing with the revolution. So it is. I think there were even fire. What is that? Yeah, this is why we should sleep more than just a few hours. So there were, a lot of celebrations in Hungary. So that was one thing. And we, as we usually do here in the U.S., we celebrated with work. So today, March 15th, also the business tax return deadline. So if you do have a business entity that is not taxed as a Schedule C, which means taxed as a partnership or an S Corp or a C Corp, or any trusts, then you did have to file a extension by today. Was that trust too? No. So no trust, just the business entities. Yeah, I was thinking that is not correct. So partnerships and corporations, you had to file a extension by today. So if you're doing that on paper, you still have time to run to the post office. If you're doing it online, or just double check if your tax preparer is doing it for you. So that's something that kept us busy, and just trying to finish as many business tax return as we can. And then obviously the next big due date is the April 15th. Is it April 15th this year? So I'm here in our boardroom in Brecksville, Ohio, and my brother and partner in crime, Laszlo, is manning the electronics and the camera. And so he's my go-to guy if I need any tax research, like the first. And then, like even before, I would research some things like Laz, and usually even, or if my computer is acting up, he just comes just a little closer, stays in the doorway, and then it starts working. So I'm really thankful for him to be working with me. Another item, housekeeping item, if you are on our list of getting our monthly newsletter, that is printed newsletter that comes in the mail, if you're one of our clients or networking partners or friends, you should have gotten this today in a big envelope. If you do not, at this point, you're not getting it, but you would like to get it, then just send us an email. Usually the email address is on the bottom, borbala@conciergecpas.com, or you can send us a note that you want to sign up. It's really not the typical accountant, a lawyer, boring newsletter at all. We are deliberately trying really hard to make it funny and exciting. Actually, I did get an email from a client of ours that I wanted to share with you. And first, she was talking about taxes and stuff. And then she said, I got that book, The Score Takes Care of Itself, that you suggested in the last month's newsletter. I'm several chapters in and loving it. This will help me in making the changes I need to make in my business. Thank you. So, thank you, Kathy, for the feedback. And we really appreciated it. So we do have sometimes a book review, sometimes a information about our clients, like the last month's one, and I mentioned this on the call on Facebook Live a couple of weeks ago. We do have a Grammy Award-winning client, Erica Brenner from Cleveland, who produced an album for Apollo's Fire, little Baroque orchestra that won a Grammy a couple of weeks ago. And so we are congratulating her in the newsletter. Also, we put in clients of the month, something that, your funny things that you might not know, but find interesting about some of our clients who wanted to be on it. And actually this month, we are introducing our newest employee, Laura Leiden, as well. And she just answered a couple of questions of, there's really we write most of these, or all of these, between my brother and I. But I really think, if I can say that it's not a boring one. The title article is just, I wrote it this time. Usually we alternate between Les and I, and it's about wiser or just older. I recently turned 45 a couple of weeks ago, back in February. So I just listed a couple of things that I learned, 13 things that I learned so far in life, and how I would like to live God willing, the next 45 years of my life. So that's about it. If you want to get it and you didn't, just let us know. Other housekeeping items. I'm getting a lot of calls from freelancers, people who are starting their businesses. And I've known this for years, but it became more prevalent that all this information that's on the internet, and you would think that it helps somebody who's just starting out, who can just get this information online. They just researched a little bit as far as what it takes, as far as financials and taxes, when you become a freelancer or you want to work other than being an employee, and just became just so clear to me that even with the zillion of web pages and informations and books and people, there's so many resources even locally, like Jumpstart, Score. It's just a lot of even government-backed nonprofits that help wannabe entrepreneurs or young and new entrepreneurs, startups with information. It's still the lack of information, basic information about these things is frightening. Really frightening. So usually I'm not criticizing people. It is what it is. Everybody starts at zero. I started learning about this when I didn't know anything about it. I just wanted maybe just congratulate those who are more proactive to learn about these things, and they are more knowledgeable about the financial and tax aspect, and just acknowledging that they are the minority. They are the top 5%. There is this massive lack of confusing basic terms. So actually that just made me realize that we need to talk more about them. In the next few months, right after tax season, I want to get out a little webinar or just a little video that talks more about the basic things when it comes to taxation of freelancers, 1099ers. And they can just watch it instead of me just telling it over and over again, hundreds of times. If you are one of those in that category that really doesn't know anything about this, just try to read about it, Google it. Hopefully you have a good CPA, a good tax advisor you can talk to about. If not, and if you're starting your business, you just have to get one. You just have to get somebody that is your advisor, tax advisor, and not just here, I have some forms here, prepare my taxes. So that's not going to go well. I'm talking about basic principles of how an LLC is taxed, how a self-employed person is taxed, what form, how do I pay myself, just really basic things. So I'm planning on talking about it more. Other housekeeping items. We're still planning to have a call next Friday, and then at some point after tax season, we're going to change the Friday to a different day. But for now, because we're so busy during the week, we are having appointments till 9-10 p.m. and then working on tax returns till the morning almost. It is hard for us to get away during the week, so we're still here Friday. Don't leave reaching out to your tax preparers to the last week. We told our clients that March 15th is the last day. And I do have, for example, this first email that I got is I was wondering if you're up for doing our taxes this year. I mean, he just literally just made the cut, sending this to me this afternoon and sending his stuff hopefully in by tomorrow. Because everything takes longer under the new tax law. There's a reason why this is called once in a generation tax season. In 31 years, we didn't have a big tax law change like the Tax Cuts and Jobs Act of 2017. So it started being in effect January 1st, 2018. So basically, this is the first tax return that we have to apply it. And everything takes 3 times as long. Parts of the law is still not law. They're coming out with corrections. We're waiting for some corrections still to come out from Congress. So it is really crazy town. We are handling it as well as we can. So even if you have a very fairly simple tax return, literally this week should be the last week that if you have a good CPA that they accept your files, because otherwise it's not going to be done. I mean, it will be done, but not by April 15th. Especially if you're one of the situations like this, a friend of mine here, he says that he moved from Cincy to Indiana for work. And so he has 3 states, Kentucky, Ohio, and Indiana tax paperwork. Now, anytime there's changes, you have a new job, especially a new state, so more states are involved, you just have to be proactive and just give the tax preparer when you moved, when you started the new job, all the details, because preparing your state tax returns, most likely it will take twice as long than preparing your IRS federal tax returns. Every state taxes partial years differently. Some are asking how many days you spent in that state, like New York, and they're just sort of the calculations are totally different. Some, like Ohio, they start with the federal adjusted gross income, and then you have to back down how much you paid to other states. So it is, if you have any complications, going to H&R Blocks or somebody who does this in their basement is really, it's not in your benefit. I have to tell you, and I just keep finding myself saying it over and over again, that you're just doing yourself a disservice. You are not benefiting from either doing it yourself in TurboTax. You're not benefiting from it, unfortunately. I mean, there's a market for everything. If you are a student, if you're just starting out and you rent and you have one W-2, okay. Although I've seen where TurboTax doesn't do your local tax returns. So here in Ohio, we do have local tax returns as well. And I know people who came to us who have not filed their local tax returns for years, and maybe they didn't even owe, but they still have to file, and they got huge penalties just because they didn't file for 5-6 years. So you can get into trouble with a lot of things. Basically the bottom is you don't know what you don't know. So just email just reminded me, if you do have, like, if you moved, if you have any complications in Ohio, if you moved from one state to another mid-year, that especially you need all kinds of schedules and everything. So it is better if you take care of it. Second one, and this is actually something that comes up a lot of with a lot of clients. It says, "Hi, we are scheduled to meet with our financial guy on Monday, and one of our discussion items is the SEP IRA contribution for 18. Are you far enough along on your taxes that you can send me that figure?" So if you have a Schedule C, if you're self-employed, and the net profit that we calculate on your tax return is a positive number, so hopefully it's a profit, not a loss, then you're entitled to contribute money into an IRA that's called SAP or SEP IRA, self-employed IRA. How much is the maximum? The formula is in the tax software. It's pretty much comes out to 20%. Not exactly, but like I can quote it as 20% of your net profit. So it's not your gross, but after deductions, what's the net profit that actually you're paying tax as a self-employed person. So in this case, actually, I realized that it is $6,100 some dollars. So that's the maximum he can do. He can do anything below. 2 things. One, he does need to contribute these funds to the SEP IRA before we push the button and file the tax returns. That's one. Obviously, he's doing it because that's a deduction on your income taxes. So basically, $6,100 out of that he contributed, he's not going to pay tax on income tax. I'm talking about income tax. Now, this is just income tax and does not have to do anything with Social Security Medicare. Social Security Medicare, the self-employed taxes are still calculated on the net profit. Now, but it could be, let's say, like this friend of mine is in, let's say, 25% average tax bracket. The average tax rate, the effective tax rate is 25%. So on $6,000 contribution to the SEP, his taxes are going to go down with, what is that, $1,500, right? So either he pays $1,500 more to the IRS, or he puts aside money, contributes money to his IRA and puts aside money for himself in the amount of $6,000. So basically it's really costing him $4,500 to put away $6,000. So because the $1,500, if he does not contribute, he needs to pay $1,500 more to the IRS anyways. So he might say, I'm so sorry, I just don't have $6,000. He could do anything less, even $1,000, but that is the maximum. And so there are two things. One, the maximum is calculated by your tax accountant. So don't contribute something like, I think I'm going to have a profit of $100K, 20% is $20,000, so that I'm just going to put in $20,000. And then you go have your taxes calculated, and it turns out that your profit is just $80,000. Then you're over contributed, and getting that back from the IRS is just a pain. I had to do it a couple of times that it's just, I don't want anybody to go through that. So pretty much you have to wait till your taxes are calculated. Then your tax accountant, your CPA can tell you how much you can contribute. You can just tell them how much less you want if it's not the total, and then you can go from there. And we cannot e-file your tax returns without getting a confirmation that it was contributed. Now, that being said, there are two other types of IRA contributions that people know about. One is the traditional, and one is the Roth IRA. Traditional IRA, maximum is $6,000 this year, right? So in our case, if I told my friend your SEP IRA maximum contribution limit is $6K, he would, as far as taxes, he would get to the same place if he contributes to a traditional IRA $6,000 or the SEP IRA $6,000, right? Only if, in my one example, if we have $100,000 profit, so the SEP maximum is 20, then I would tell him, you're better off if you really have money and you want to contribute to your IRA, you go with the SEP because that has a higher limit than what the traditional is. And then lastly, the Roth IRA, no tax consequences. So you put it in after taxes, you're still limited to the $6,000 a year, and if you're over 50, you can get a catch-up. But other than that, it grows tax-free, and when you take it out, the Roth IRA, it's not going to be taxable either. So say we have a very young person who, let's say a 20-year-old, who earns $12,000. He's not paying any income tax on it. The standard deduction is $12,000. He's a W-2, so he is allowed to contribute to his IRA. Let's say he puts in $6,000, and he should totally go for the Roth, right? If he goes for the traditional and the $6,000 is tax-free, how much is his tax? $0. So he's really not saving anything. So he's way better off contributing it to a Roth, which is after tax, and then it just grows. So by the time he's going to be 59 and a half in, say, like 40 years, hopefully that $6,000 is going to earn a lot of dividends, a lot of growth. And then when it's taken out at that time, no taxes whatsoever. At least that's what we know based on the current laws. Nobody knows what's going to happen in 40 years. Yep. So this is an interesting, and I would just want to mention it because sometimes it comes up. So he says, "Hi Barbala, can you please send me a certificate of good standing for my company?" So we do all sorts of things for this particular business, and one of the key employees says they need a certificate of good standing. So I wanted just to mention it because sometimes it comes up where you might hear this at the bank, and it's like, what is a certificate of good standing? So where the Secretary of State, where your business is registered either as an LLC or a corporation, so that's a state entity, most likely has a website, right? As a website, and they can issue this one-page letters called Certificate of Good Standing. Basically, just they double check that you don't owe any tax, you're doing fine. And in Ohio, actually, you can do this online. It costs $5. Pretty much, you get a PDF. You get a PDF with a stamp, and it's like colorful. It's a colored PDF through an email. You get it back in maybe in a day. So every state again has different rules, but this might be something that you hear. So if you hear it like Certificate of Good Standing, like who's giving this to me, the IRS or Secretary of State? Like, is it my CPA? Just know that there is such thing. Like sometimes banks, if you're requiring a loan, or even vendors, if you're looking for a credit with a vendor, they might ask you for this. In my case, my clients have contracts with the government, so some government entity or quasi-government entity, NGO type of organization might require that, just to double check that these are reputable, ethical people. So this one is also a question that comes up quite frequently with small companies. He says, "Hi, Borbal. I'm so sorry to bother you during this busy tax time, but our grant writer is asking for an alternative to qualified financials to be submitted with a grant application. I know we talked about something in QuickBooks. Can you tell me what I should give her? And is it in QuickBooks, and would it be sufficient? Thanks." So I had a couple of small business clients, like every year I have a couple of them, where they go to the bank and ask for a mortgage. Or in this case, this is a nonprofit, and they're filing, a grant application. And the banker or, the grant writer says, "I need audited financials from you." So that just means to me that the business banker has like no idea about how big this business is, or just like overall. No small business, I would even say private, single shareholder, or closely held, private family company, they usually don't have audited financials, other than if they're really, really big, or if it's something so special going on. And this is why. And audited financials cost at least $10,000-$15,000. So actually, I do not do audited financials myself. A prospective client was asking, and they're international and they're operating here. The international owner said, like, you should get one and show it to me. So they contacted me. I contacted a friend of mine who knows somebody who does, like a reputable firm who does audits and reviews. And they are really like not the big four. It's like, it's not going to cost you $100,000. And even with discounts and stuff, the guy said it's going to be more than $10,000. And I can only do it like in like 40, 50 days. Most small businesses, they cannot warrant the cost of $10,000, $50,000 just to somebody to say, yes, your QuickBooks, your financials are good. Now, yes, an auditor would say they look at a lot of other things, internal control and other stuff. But basically, like, this nonprofit is very new. I would say they have, a couple of $1,000s. There's no way they will get audited financials. Now, I do have a friend who is a CPA for nonprofits, and that's all she does, get people ready and for audits, because she said majority of nonprofits have to be audited every year. So I can see why this grant writer might have thought that this particular nonprofit could have audited financials as well. Now I have to tell you that $10,000-$15,000 would be more than their total budget for the year. So I just asked them to ask the grant writer if financial statements on paper, which we're getting them from QuickBooks, right? If they're done right and just signed by one of the board members or founders of the nonprofit would be enough. Hopefully it is. Hopefully it will. So but I had a client who just has a small business, for-profit business, $20,000-$30,000 gross revenue, and he still has a W-2. He went to the bank for a loan, a home mortgage, and he was asked the same thing. Show me your audited financials. And the banker called me, and I didn't know if I should laugh or cry. I said, this guy is $20,000 1099. He's never going to give you audited financials. Like, it doesn't happen. And that they just didn't want to understand. So that's about audited financials. There are 3 levels, and also audit, review, and compilation. And they can only be done by CPAs who have this special license, or they ask for a special license and basically pay some extra fees to be able to do this. We just got a new client who had their taxes prepared, corporation, their taxes prepared by an enrolled agent. Enrolled agent is a good tax preparer who takes some exams in front of the IRS, and the IRS says, yeah, you're kind of like licensed to do this. And the guy also, I got a copy of reviewed financials that he printed out from QuickBooks and signed. Now, that's totally illegal. Like, there's no thing. Like, I could not do it without the special license, let alone somebody who's not even a CPA. And it was incorrect. Like, financials were just printed out from QuickBooks. There were no massaging. There was like nothing. They were not correct. So that's about audit financials. If you want to know more, let me know. Going back to the banks and stuff, we just talked to my brother about this. Yesterday, we got a new client who signed up, who is a Canadian company in the computer IT space. And this is I'm just telling you this as a encouragement to all small businesses out there that are really like trying to be proactive about their marketing. And just the interesting thing is not just like that we got this client. I've never seen this client in person. He called me up, and first he sent me an email. And actually, there are two lessons in this story. One is I asked him if he's in Canada, like why, like how did he contact me? Like why was he looking, for me to do his American company's taxes when the company has been headquartered in California so far until this year? And he said that he relocated the company to Ohio and to Cleveland, and he just stumbled upon the first bank where he established his office, and he opened a bank account, and then he just talked to the banker, and the banker said, here is Borballa's card. You should call her if you're looking for a good CPA. Now, the interesting fact is that I asked who the banker was, and I got a name, and I have I know that I was in that branch because I banked there as well, at least one time. I do not remember this particular banker, but I know that she talked to me, and we exchanged words, and I might have told her that I'm a CPA, and I might have given her a card. And I'm pretty sure that was more than 3 years ago. And maybe I could even have invited her out to lunch and stuff, but I didn't do it. Now, why I'm still bringing it up is because if you are at least halfway proactive, you never know where you're going to get a client. Now, this is going to be a fairly good-sized client for me, and I have to make sure, to take that banker out to lunch and thank her. But being nice to people and just talking about what you do, basically it could result in tens of thousands of dollars of income 2, 3, 4 years later. So basically they are just seeds that we sow every time we talk to somebody. You never know when that other person or somebody they know, they're going to be in the situation where they just need exactly what you are selling and what you are providing. Now, being in the face, and I could have done a better job asking for this particular banker's card and then putting her on my newsletter, email or otherwise. Like, I could have done a better job. And basically that's what we are doing with this, like being in the face of the client with something so they just remind in their mind, our name is reminded. That's the only reason. I mean, we have fun making it, but it's a lot of time. It's a lot of money too. But it's basically being proactive. So it's tax season. And if you know us, you know that nobody just like drops off their stuff in our office. So we have appointments with them throughout the year. We really know them and we help them, advise them in lots of things, including marketing and business. Now, not all people make an appointment. Like a lot of them online on GoToMeeting. Like yesterday. Yesterday was fun. I had this this couple with new parents with a 5-year-old. They were on GoToMeeting, and actually they showed me the baby. And on the video, and I was looking at their tax return in my office. They were at home ready to get dinner, and then we were still talking. They're very busy professional plus one baby, so that is fun. But getting back to the point, sometimes it could be invaluable, the people that you talk to and the information that you get. I have this client who came in this week, and she started her freelancing business, consulting business 2 years ago, and it's just from after being a highly paid professional for decades. Like, she was at the top of her game. She started, freelancing, the consulting, and it's really not going as much as, she used to make 6 figures, right? Mid 6 figures. And now it's like, it's hard to start these, speaking gigs or otherwise. So our appointments are 60 minutes long. Maybe we took 3 minutes to talk about the tax stuff. And then we spend the other 57 minutes talking about what she can do right now and implement to take her business further. And maybe this is not even the first time I told her. Again, I did not come up with these things, just things that I've learned and I'm using in my business and things that a lot of our clients are using. It's not rocket science. It's really not, but it's just, just stuff like, oh yeah, I should do that. So we spend the 57 minutes talking how she can reach out to all the people she knows, put them on constant contact in MailChimp, and just email them kind of like a progress report, a press release type of stuff. This is where I'm talking. Follow me, come here, invite people, everybody that she knows for like cocktails, or just get an invitation out for a talk. So then people know. And her clienteles are like corporate, right? So corporate executives. And then we also talked about how she can reach them on paper. What about how much is to print out a postcard? It's like 13 cents. What should she put on it? How frequently she should send something to these people and follow up that way? Because you just need to reach people in all different channels. Again, just basic marketing. Anybody who went to the marketing school or is a student of marketing knows these things. Sometimes, and again, my client she has more degrees than I do for sure, but she just needed reminding that, oh yes, I need to, not just like I should do, because that's what she told me. I have to do cold calling, and I just cannot take myself to do it. That's why I don't have any clients. I said, okay, but there are other venues, other things that you can do. And I said, what if you get an intern from a local college, like a marketing intern? If you have the system already, they can help you, like sending these postcards out. If you have the list of all the people that you know and you get in contact, and she's all and about a lot of times. So just get them on a list, email, phone, and mailing list, and mail them. Today I had lunch with 2 friends of mine who are executives. We're very involved in different local chamber of commerces. And it's one friend of mine, Nikki, she said, I need the Chinese chamber's mailing list so I can extend them some invitation to a business summit that we are doing together. And my friend, the executive of the Chinese Chamber of Commerce, she said, oh, so like you want our MailChimp list, like email list? And he said, no, the mailing list. I just want the mailing list. And even just, and my other friends like, oh, oh, I thought you want the email because nobody's requesting the mailing list. And then Nikki said that she got so many people attending the business summit just because of the mailing invitations. One of the things that successful business people do is doing stuff that others don't, right? Like counterintuitive. If everybody's online and talking about SEO, there are a lot of people who are just doing direct mail and they are killing it with it, right? So I really believe in combination of things. So mail, email, phone call, personal invitation, and so on. So long story short, that's kind of like, those are kind of the ideas that you should surround yourself with, people who can give you ideas. You never know. Like my friend Andrea, she came in just for tax prep, and hopefully she can implement, like, again, it's not stuff that she didn't know, just as a reminder from me that you should do all this. Because there's no one way that will bring you 100 clients, but there are 100 ways that will each bring you one client, right? And then also you have to measure the ROI, the return on investment. When I did this mailing, what happened? When I invited people over to some event, what happened? And just you're in the face of the potential clients, right? So that's about marketing. This is another IRA. We have a lot of IRA questions today. It says, my husband is interested in converting money from my traditional IRA or his 401k, if permissible, to a Roth. Can you advise if that is still available to us for 18? And also, how much we could convert without bumping us up to the next tax bracket? So there are three things that I wanted to address here, why I chose this question. So there's such thing as, you have IRAs and they're traditional. So you took the tax benefit when you put money in them. You did contribute to your 401k at your work. Usually you cannot convert or do anything with your 401k while you're still working there. When you leave, then you have the choice of leaving your 401k there or rolling it over, what's called a rollover IRA, and just like you investing it in whatever you want. Some companies, you can get them and take the money out basically from a 401k and then roll it over, convert them over while you're still working there, but usually not. So a couple of things. If he contributes to his 401k currently, but his intention is that I really don't want the tax deduction for this, conversion to a Roth means that I just want to pay the tax on it now, and then I want it, especially because they're young, I want it to grow tax-free, after tax. There is such thing as Roth 401ks these days. So it started to be really popular a year or two ago. So I would suggest to my friend here to check out if the company actually lets him contribute to the Roth 401k. So Roth 401k is basically like, why wouldn't just somebody take the money and put it in a brokerage account? Because on current year's taxes, that's pretty much what it is. No deduction, paying tax on all my W-2. It's about the growth. Right? If it's in an IRA, a Roth IRA, it grows tax-free. If I just put it in a brokerage account and I earn the same interest and dividends every year, I have to pay tax on it. It's like but I can access it if I need to with the retirement account. Hopefully you don't have to access it before you turn 59 and a half. So that's one thing. Look for a Roth 401k option. 2, conversions are not like contributing new money into this account, so they are not for 18. Like you're doing them when you're doing them for that year, right? 3, when he asked how much could we convert without bumping us up to the next tax bracket, I'm hoping that what he's asking is like how much I can convert, how much extra income that's taxable, it's going to be taxable to me this year, I can earn without getting into the next bracket. But I'm hoping he does not think, erroneously, that you can just, your income goes over a certain amount, threshold, and then bumping you into the next bracket, meaning all your pot, the income pot is taxed at a higher level. because this is how we are taxed in the US. So it's kind of like steps, right? So the first, let's see, married filing jointly. First 24,000, that's the standard deduction, zero tax. And the next $19,050, 10%. And the next 58,000 some dollars, 12%. So if you start earning each step in amount threshold is taxed at a certain level, and you go up and up. So if somebody, let's say, is at 24%, if they earn another 50K, that final 50K step will be taxed at a higher rate. Doesn't have to do anything what's below. So I can answer this question saying, if you add extra income by this conversion to your tax return in 19, what is that rate? But it will not have any effect on anything that is below. Like all the time, the first 24,000, at least if you itemize even more, 0%, then 10%, then 12%, and then so on. I was driving this afternoon coming back to the office when somebody called me, and I talked to them, and they said, I'm presented with this opportunity to work as a freelancer, and I just really want to know how much taxes are, because, I was working for a school system once, I earned $10,000 W-2, and then that year we just owed $4,000, $6,000, she said, $6,000 in tax. So I said, oh, well, for $4,000, it was really not worth for me to, work at the school part-time all year. And I said, okay, there are two things here. One is taxes were not $6,000 on your $10,000 W-2. They just were not. There is no 60% tax bracket in the U.S. So I understand, and the husband has a considerable W-2. So I understand that your tax rate, together with your husband's big W-2, might have been, say, 25% on average. But that's just $2,500. The rest to $6,000 was owed by your husband. Your husband W-2 was under withheld. Or you had some investment income, something that was taxed that didn't have a withholding. So I understand that's how you felt. But even if you would have not worked, your husband or the family would still have owed money. So it was not, $6,000 was not on your little 10K W-2. Now that being said, even if your taxes, let's say they are $2,500, and you say, yeah, still for $7,500 for a year, it's still not worth for me to do all that work. That's a different thing. But there is no reason, no risk ever. It doesn't matter what, you could be the highest tax bracket. There is no way that you are not left with money after paying taxes. And I would say even like 50%. I would say there is like a very low chance that you would ever be left with less than 50% of the money. Right? Because we can think of 14.1% Social Security Medicare together. You are, what is the highest tax rate now? 37%. So 37 plus 14, it's over 50 a little bit. Ohio, if you're self-employed, actually you pay zero. So that's what actually I told my friend. I said, if you have a I'm not quoting it right, because if you have a W-2, you pay 7.65% Social Security Medicare. It's taken out of your pay stub. If you're self-employed, you pay 14.1, but you would pay 7.65 anyways. So what is the difference between 14.1 and 7.65? 6 something. So you pay 6% more if you're self-employed. But then, and in my friend's case, her tax rate for Ohio was about 3.5%. I said, you as a self-employed person, you're going to save 3.5% in tax because your tax rate in Ohio is going to be 0% up until $250,000. So, 6 point something percent more Social Security you pay, but you save 3.5. So that's like 2.5, right? Extra that you would pay if you're self-employed. Otherwise, W-2 is almost the same. Now, again, there is no reason of not trying to earn some extra money just because of fear that all the money that I earn is going to be taken from me for taxes. And I know for people who this could not be a problem for me. It was really hard for me to understand too until I started seeing people in the office who literally put their lives on hold for 2 years, having a good business idea and having started business first because they said I just cannot figure out the taxes. Taxes are gonna take all the money. So she just did nothing and earned some, very low wage somewhere. I think she said Lowe's or Home Depot. And not doing her taxes, thinking taxes are going to take the whole thing. There is no such thing. So please don't be afraid. Don't be afraid. Try to make taxes. And also, I didn't even mention that you're not paying tax on the gross amount that you earn as a sole proprietor. You have all these expense categories, valid business expenses you can deduct. And you're only going to pay all these taxes we're talking about, Social Security, Medicare, income tax, only on the bottom figure, right? So, and they're valid expenses that you would have anyways. Maybe, part of your phone, your home internet if you're working from home, part of your home office utilities, mileage reimbursement. Some of these you would have anyways, but now actually they are business deduction, valid basic business deductions, and you only pay tax on the difference. So when my friend said, how much should I put aside for taxes if I get $1,000 as a freelancer, it's very hard to say. I mean, I could just throw percentages out to you, but if I want them to be accurate, we also need to talk about expenses, right? Because you will only need to pay tax on the difference. So $1,000 income minus, let's talk and brainstorm about the expenses, and then calculate that or project out the taxes on the bottom. So all this, if we remember one thing about this is, if you have something else than just a W-2. If you have freelance 1099 income, if you started your business, it is so impossible to do all these things and get it right and sleep better at night and get with the best solution if you do not have a proactive CPA or business advisor, somebody you talk to about these things. Sometimes it feels a little weird, because it feels that I'm a CPA, so of course that's what I would say, right? And actually I just gave $2,000 to a lawyer today to help me with things that I've done already myself successfully. But I said there is a risk. I'm paying all this money because there is a small risk that I don't know something that because I'm not a practicing lawyer. So I'm going to pay all this money, even if I could have done it myself, just for, having that protection against that risk, which is very small, but I'm not willing to take it because I just don't know what I don't know. So all the Mark Cubans, all the Warren Buffetts in life, right? They would not do their own taxes or business advice. They are actually surround themselves with advisors. And this is not just about tax, just like overall. My mentor who built from zero a $7.5 million company in 6 years, he told me recently that he really thinks, and he's okay with it, that he overpays his consultants, his advisory board, because he just wants that, he wants their best advice. And from zero, literally zero, living a W-2 job, he built $7.5 million company with 50 employees in 6 years. So if you feel like I'm just starting out, I don't know what I'm doing, I cannot afford anything, just think about this. Going to the Women Business Center, going to the entrepreneur organization, going to Jumpstart, all these places that cost money, the return on investment is going to be more. It is. And if you ask all the successful businesses, also started out with zero, just like you and I, those are the ones who took advantage of those. So we have a few minutes left. Another little just question regarding like understanding W-2s. And I get this a lot of times where people look at their W-2s and they say, oh my goodness, my wages on my W-2 were so much lower in, let's say, 18 than in 17. And then they ask the tax preparer, they ask me like, what do you say about this? Like, how can you reconcile this? And I have to tell them, have you gotten all your pay stubs? And for example, this particular a friend of mine is working for a private university. So I'm pretty sure that, they processed all the payrolls. Now, so she says, my wife's W-2 had less in wages in 18 compared to 17. And she tells me the difference, and it's about $8,000. So she says, can you help us understand this? Said, I really don't know what to say about it. If you got all your paychecks, you didn't take any unpaid vacation. The only thing I can think about, she got a bonus at the end of 17 that was extra. That's why the 17 W-2 is higher. Other than that, if that doesn't happen, and there were no so this is taxable income. Like, I really don't know how could have happened if you did not see the paychecks being lower in 18. Like, you would have noticed from when you're, let's say, you're getting $2,000 every 2 weeks, and now you're just getting $1,500. I mean, you just have to notice, right? So your CPA cannot do anything about how much you earned, right? And it just basically calendar year 2018, doesn't matter for which period, if it was 17 or just how much you got paid, calendar year 18. That's what's on your W-2. So you have to take it with your HR or payroll department. This is a short email from Rebecca, who I had the pleasure of meeting, and she is very active in the local freelancers union. And I mentioned last week that they invited me for a little tax workshop like a week ago and 10 days ago, and it's so much fun. And she said, thank you so much for your help yesterday. I appreciate all your advice. I'm so glad the Freelancer Union meeting went well. I hope to see you around at WBC. So if you're interested, and we're trying to post stuff like where we are, we are going to do a tax seminar next Tuesday, the 19th, the 19th of March at the Women Business Center, which is on 7000 Euclid, I believe, downtown, Midtown, Cleveland. Free parking all around. It's anybody can come. So if you're in the area, I think the biggest part of these is like if you have a question, usually we stay as long as people have questions. So you have a specific personal question that you want to ask, a proactive strategic CPA that otherwise you would have to make an appointment and maybe pay $250 for a consultation. You can come and ask these questions, right? And also you can ask us. If you think that this is a question that you want to ask and you want me to answer on the air, you can email it to me, to my email address anytime. So next Tuesday, like 6 o'clock-ish, I think, when we have to be there. Now, this last question is, I'm going to use it as an example of what not to do. So I talked to this client. She used to be a client, and I said, you need more help. You need more help with your QuickBooks, because 2 years in a row, she said, I'm going to clean out my QuickBooks. I'm doing bookkeeping in my QuickBooks. And she came in January, and we realized QuickBooks is really bad. It's really not good. I could just not care and do the tax return based on what's in QuickBooks, so the financials that are in it. But I looked at it, I reviewed it, and I know that some of the expenses were not there. Some of them they are downloaded twice. So they just needed a lot of help. So we talked last August, and I said, here's what it's going to take for me to look at this every quarter, clean it out. Otherwise, I really cannot do your taxes, especially not in tax season. Because, again, the last 2 years, I just tried to help her out and cleaned out her whole QuickBooks in the beginning of tax season. I worked on it a week or so every night. And after 2 years, I said, this is not going to, work anymore. So I said, we just really need to work on, and she paid me for it. So I said, I would rather just do it monthly, looking at it quarterly, than at year end when I really don't have time. So she just went radio silence in August, did not call me. I said, okay, maybe she's going to find somebody else. And of course, she emails me and she said, it has been such a crazy year. I'm feeling a lot of anxiety over the accounting. So hopefully we can work this out with a plan moving forward when we talk. And she made an appointment. So I just wanted to use this as, again, I'm not criticizing people. People go through all kinds of crazy things happen. Life happens. Family's always first. Just as an example of, I will have to tell her, like literally I filed an extension for her today, like last did. And so we have an extension for her, but otherwise I just cannot even get into this. What happened between August and February? So do yourself a favor. This year, after tax season, start looking at your financials. It's not the right time in tax season, because with the best of intentions, I do not have that much time. I cannot even accept time. I mean, literally, this is such a crazy tax season. People are contacting us, and we are turning people away because we just don't have, more capacity, especially if stuff that could have been done before. So, long story short, if you're in that predicament, just scrambling to get your financials together, there is a better way. And the biggest reason is not to spare a couple of hours sleep for your tax accountant. The biggest reason is because I'm 100%, I'm 1,000% sure that if somebody just puts together their financials now, a day before they see their tax accountant, they're going to leave deductions on the table. They're not going to have either frame of mind of looking at all the receipts and putting things in the right order. So if you're not putting things in the right order, you're going to open yourself up for audits. So then it's going to cost you thousands and thousands of dollars just because you didn't do something correctly. You're going to leave money on the table. That's how simple it is. So do yourself a favor. This is the time, March, you're 2.5 months in the year. Right after, whenever you have time, don't delay it. It's so much easier to remember what happened in February if you do your accounting in March, right? It's just, those things. If you do have an accounting software like QuickBooks or Xero or anything, or even if you have just an Excel template, just make sure that you clean it out and you do it. It might only take 5 minutes every Saturday while you're sipping your coffee. You can do your accounting in QuickBooks. You can take a bootcamp course, private bootcamp session with somebody like us. You find somebody else, people who show you. Like what we do is we show you exactly what you have to do. We videotape it. So actually we record it and give you the recording, and you can rewatch it. It's like, that's what they did. That's what, I thought I'm going to remember it. I had, this is a funny story. I had a client of mine who's a female. It's a super, super nice, good client. And she said, my husband can do this. And he should take a boot camp with you. So husband comes in. I said, so we're going to record it. I'm going to talk. There's no need. I did this back in high school. I used to do QuickBooks back in high school, and he's like 45-ish, over 40, I think. And so I was just like looking at all over the whole 2 hours, and I was just talking. And then, of course, 2 weeks later, he told the wife, no, I'm not going to do this, which I predicted because he was really not interested. So, but we do record it and give it to you, and also give you feedback and just little check-in boot camp sessions just to see that you know what you're doing. So if you decide to do it yourself, even if you don't, later you decide not to do it, but just to understand and be able to look over the shoulder of your bookkeeper or office manager or whoever's going to do this, it's worth it. So with that, those are all the questions for today. And as every week, I really thought that we are going to be done in half an hour. And my brother is always right when he's smiling when I say that. So thank you very much for watching. If you have any questions, let us know. Good luck with your taxes. Hopefully you're getting, refunds that you're expecting, or you don't have to pay a lot if you didn't expect it. Try to be really proactive about your financials and just literally do what all the successful and wealthy people do, is just focus and just take some time to focus on the numbers. Don't be afraid of them, and find somebody who can help you. So see you next Friday. Talk to you soon. Bye-bye.